Hello, everyone. It is September 9, 2022, and today we're going to be discussing September signs of a bottoming process. So let's take a look at certain charts for the day, and let's go ahead and begin. Okay. We are seeing signs of a bullish recovery. And for September, obviously, solars have advanced the most. Today's topic, Free Friday class, is about technical analysis and about leader analysis. Let's go through it. So I checked a few names here, and amongst the last few prices, so what I did in my analysis was check last price for September 8th. In this analysis, I already checked which are the lows of 2022, which was evidently May 12, June 16, these were the recent lows. And then you've got the recent peaks, which is August 16, and the Fed speech, which was August 26. Now, from September 6 low price currently, which is the recent weekly low, I also took a look at it before the markets advanced. As we are seeing, September 6, 7, 8 seems to have been a bottoming out process. Also, we're actually analyzing the 52-week lows for the year of 2022, as well as the recent rally move. You can see that from June 16 till August 16, which is 2 months, a lot of your outperformers truly rallied up. We've got Enphase rallying 80% here, for solar trading 90% higher. And of course, I'm trying to check whether the August 16 peak until the Fed speech actually prevented the stock to get profit taken. And you can see that some names didn't do much selling pressure, such as Enphase and for Solar, and neither was there significant selling pressure for your Cell H. The big significant selling pressure happened here for Ashford, some big drops here for Silvergate, for the Trade Desk, for Dutch Bros, which tells me that they are a weaker format versus the ones that have been very strong, such as Enphase for Solar, Sunrun, Solar, SunPower, Cell H. Now, also, you can take a look on the current prices versus the Fed speech. Notice that most of your leaders or outperformers barely actually got scathed, even the Fed speech 20, August 26. And in fact, most of them have been rallying more than 100%, at least for the first three, four, five, six, seven names. These are all solars except for Cell H and AHT. Cell H is the Celsius drink. It is a Monster Energy drink. AHT has to do with a real estate, hotel, hospitality trust. So that is a hospitality hotel REIT. You can see the percentage change from May 12, which in my view has been their near-term lows, have been quite a pleasant move from about 90% all the way to 120%. So truly speaking, we are seeing some outperformers here and a lot of strength as well coming now for some uranium plays, especially CCJ and UEC, rallying 46% from their current May 12 lows and actually rallying quite significantly here, 20% up since the June to August rally move. We're already seeing some outperformers like the Trade Desk rallying 66% since June to August. So I will take a look on these outperformers because these outperformers are where your leadership is coming from. And you can clearly see that leadership today is coming from a lot of solar firms and a lot of energy firms. And what I could argue for the Cell H performance is really related to their earnings. So Cell H did a good, wonderful earnings. HT hotel REITs have done well in terms of earnings. This is also true for Airbnb, Marriott, Hyatt, Hilton. Also true, we've got the Trade Desk having an outperformance on earnings. Even Silvergate actually outperformed CCJ as well. I think the only lone player that didn't really outperform in terms of earnings was Dutch Brothers and Intelia. So this might be an aberration related to short covering. Are you guys still with me? Maybe I talk gibberish, but bear with me. All right. So we're seeing here some of these charts of the outperformers. So for Enphase, we can see all throughout this year, 2022, after dropping, has managed to rally and consolidate. And we can see that it clearly has shot up to all-time highs, suggesting that any dips back towards 270 and 260 is already considered a lot of buyers, with your 50-day moving average and 200-day moving average providing support. So there's a lot of supports happening for Enphase here. A lot of supports as well for solar. Do note though that because it has outperformed quite strongly, there may be some pullbacks or consolidations or healthy dips that could happen. For solar, 50-day and 200-day moving averages comfortably here, so $80 to $100, which tells us that everyone owning for solar and Enphase is a winner. So there likely is a hashtag winners win momentum play happening towards these names. Take note as well on Sunrun, a lot of names, your 200-day moving average and your 50-day has already crossed on the uptrend, which means that any dips on Sunrun, about 30s and 28s and 31s are already all-time higher lows with a move towards perhaps 50. So be careful on Sunrun. I think that any dips here would have a lot of buyers. Careful for those who are selling early because although it's okay to trail your stops and take some profits, you may actually lose out on a further potential run up here for Sunrun. So this is still very strong. Celsius, as I said, is trading. Technically speaking, all of our positions here, we are simply discussing charts today on a Friday. So this has nothing to do with any fundamental talks that you are thinking of. Although it is true that CellH has really rallied and got market share, which is related to why it has been outperforming, especially after earnings. You can see that there was a gap up from about 80s towards about near hundreds, consolidated nicely here, and then went back from 90 to 100. Suffice to say, CellH has all the momentum going for it. That means that any dips, as long as it is remaining above this 200-day and 50-day, would still have more bulls than bears. So CellH has a lot of buyers actually from 90 all the way to 80 to 76. Silvergate, also an outperformer, has gone up 100% actually from the lows here to as high as 112. Recent dip was healthy correction from about $100 to $80 and got shot back about 92. So although cryptocurrency has been volatile, we are seeing Silvergate after good numbers actually is behaving much like a crypto bank wherein it earns a lot and then it doesn't get affected with the volatility of crypto. The trade desk has also gone up from firing for all cylinders. You can see that gap up, nicely gap fill here. Very strong from 40 to 60. This is a 50% move in the last 3 months. It is actually an outperformer in all technical metrics. It's also good to note that actually the trade desk has had a very good outlook for the year, and it might be in the short term one of the favorites of Wall Street in terms of digital advertising. Intellia Therapeutics, so I'm not aware on whether it has really done very well in terms of earnings. As we can see, actually, some gap down happening here from earnings. Nonetheless, from 35, Intellia has gone up to 60. This was a prior winner. You can see that from about 77, this rallied all the way to 180, and it looks like it's already recovering and reversing soon. So we are seeing actually already some outperformance in some biotech, particularly in Intellia. NTLA has been a nice higher low here, and it might be actually a weaker bull versus the solars, but it's still worth it to check whether we are already seeing some bottoming out formations. Wingstop was an amazing move. We're just talking about the charts here. Wingstop actually gapped up here from about 100 to 120, and it looks like there's a lot of short covering that prompted it from going 110 to 145, a 35% winning streak in just a week. So these outperformers are telling us that the market is broadly getting bought, not just simply on solars, but even on a few beverage names, a few restaurant names, a few biotech names. Elf Beauty has continued its run up. This is still surprising to me because obviously um, you would have thought that beauty related products are not necessarily going to outperform in this type of a market. But this already tells you that the market is actually willing to buy even small companies like Elf Beauty. PacBio also seeing some outperformance here. Although this is still below 200-day moving average, it's still below $10. We are already seeing that $3 to $4 setting up a lot of support and actually higher lows here at 5 and 6. We're seeing actually PacBio similar to about Envita and Bark and Fubo. These small caps are actually getting a lot of love since bottoming out around June, July areas. Now, let's just go through some analysis of other technicians as well. If you've seen the percentage of S&P constituents rise from less than 15% to more than 90% within 50 days, and that's what happened from about June 16 till about August 16, whenever S&P dips there and closes at a 20-day low within the next 50 days, usually that drop in the next 50 days or the next 2 months shows a lot of outperformance. You could see that in May 8, 2019, 5-day change was still negative. 10-day change and 21-day, or about 3 weeks, is still negative. But when you start going into the 42-day, 63-day, 126 or 252, chances are the market is going to be buying the dips, and it's actually going to have a positive forward rate in the next months. So this is telling you actually a 100% hit ratio. That's why a lot of bulls continue to be buying on dips, and we are actually seeing that those buying in dips in the last 3 days, September 6 to 8, has already been rewarded. So moving from broad weakness to strength in a hurry is very rare. Another study by Jonathan Harrier, he says that he checked a lot of months wherein the market actually went down from below 10% to above 90% in the S&P. In terms of number of breath, there has only been 6 times in November 85. And of those 6 times that this occurred, this rare occurrence occurred, most of the time, 1 month, 2 months, 3 months, 6 months in a year is a positive year. So we're actually seeing that potentially when you're seeing already a broad-based sell-off and then a broad-based risk-on rally, that is actually a recipe to say that the Fed interest rate hikes are mostly priced in. So we're already seeing that the S&P 500 has fallen down 25% in the first 6 months. That is very rare in terms of occurrence, and it's actually a necessity that has usually resulted in a positive run up in the next 6 months to a year. And that's the reason why a lot of people have started buying about June 16. You can see before the end of the month of June 30, and has resulted to that run up from 3.6 all the way to 4.3 for S&P 500. This is a retest or a higher low. We are seeing that at about 390 and has rallied back to 400. Now, the cause of concern of other people is that this could be just a rally towards 4.3 and then another drop. Nonetheless, in the short term, we are seeing that in the next 2 weeks or a month, the evidence outweighs for a rally furthermore, at least for 1 to 4.2. So we might actually see a bounce furthermore in the next few weeks. Your QQQ has dropped as well, 33% this year, from about as high of 400 to about 260, which prompts other people to assume that this 33% drop has already seen higher lows for the market, and that has been the low. So this is a higher low here at about 290 to 300. Some people are buying. I think that we would be on the agreement that so far the negatives have been mostly priced in: high dollar, inflation, energy crisis, and the fact that your Enphase is trading at all-time highs. A lot of solar names are trading at all-time highs, means that the market is discounting a lot of the weakness and is already prompting which leaders to come in to buy into the market. ProShares S&P 500. These are the dividend aristocrats ETF. So these are traditionally where a lot of safe haven sleeps upon when the market is very bearish. You'll see that while the S&P 500 corrected 25%, this corrected mildly to about 18% and has rallied as well from 80 to 89, or a 10% rally. So from a peak 100 to 90, we're already seeing that this is sideways. So there is less aggressiveness even on the part of people to be adamantly parked into the dividend aristocrats. So dividend aristocrats are composed of utilities and staples, which are generally sideways formations when the market is correcting. And we can see that 2021 till 2022, when the market corrected, the S&P dividend aristocrats or noble ETF has actually consolidated sideways, nicely preserving the cash flow of many people who are parked in S&P 500 who wants to be just in the dividend aristocrats. Dividend aristocrats refer to S&P 500 constituents that have been giving consistent dividends for the last 25 years. Okay, so we are seeing that the return percentage as well has been broad-based. As I said, microcap growth from June 15, 2022 till August returned 14%. Your microcap value is 6%, which tells you that even the ARK-related names have rallied quite strongly in the last 2 months. You're also seeing Russell 2000 growth outpacing value, mid-cap growth outpacing value, top 200 growth outpacing value. It's all, you're now actually seeing a little bit of reprieve given that value stocks have been the biggest winners in 2022 so far in the last 2 months. However, we are seeing growth stocks resume a comeback. And the nice thing to also watch out, this is from Charlie Bilelio. If you look at the S&P 500 year drawdowns, we've seen a drop of 25%. And over the last 20 years, the only time that we exceeded a 25% drop was during 2008 to 2009. This was the 50% drop during the global financial crisis, and the Nasdaq bubble, which is year 2001, 2002, where you've seen a 29% drop in the S&P 500, and in year 2002, 33%. So some people are actually arguing that for the year 2022, because if we're not hitting the global financial crisis, if this is just another ordinary correction similar to what happened in the last 20 years, then this could have been the lows, and a lot of the negative pricing has been discounted in. Take note that from 1982 till 1999, we never actually dropped more than 25%, save for 1987 during the great crash during that time, October 1987. So we could argue actually that 2022 drop of 25% and 33% is already big enough to warrant that all the negatives are being priced in indeed. So you can also see that the stocks US equity futures are climbing just as the dollar has retreated. There are people who are already investing, preparing for a more hawkish ECB outlook, that is your euro rising against the dollar. And usually when the dollar weakens, you can now clearly see that the risk assets are returning back. The weekend is also a chance to lure tourists, Tokyo governor says. Dollar dips as traders eye further ECB hikes and US inflation data. So far we are seeing that the dollar is weakening because a lot of the rally is being profit taken. So far, what we're seeing that the Aussie, the Kiwi, the sterling, the yen, which were headed already for one of their are now headed for their first daily jump in a month. So far, the charts are already seeing the first biggest weakness of the dollar over the last few months, no? So the last time that the dollar weakened was also around June, July, wherein we got one of the best rallies in the market. So another drop in the dollar could actually prompt the S&P 500 and the Nasdaq to also rally higher. So that means that we are expecting that the S&P 4039 will be bought all the way towards 4243. So this is your crude oil as well. Another thing to watch out for is that since the CPI inflation data will require a lot of look on the crude oil, the drop of crude oil from 120 to 85 also lends support to the fact that the market could rally if inflation peaks and is easing down. It is lower for the last 2 to 3 months, and that could actually help about 5 months already, and it could actually help the CPI inflation data coming out soon. You've got the oil and gas. While there has been a drop, obviously, it is still, however, in an uptrend. So some people would be looking to buy oil and gas explorers and producers if this drops from 60 all the way to 40 or even 30. So a big drop in oil and gas commodities will actually prompt some buyers to also buy the dip. So we're already seeing that there's volatility in oil and gas opinions. Now, take a look as the dollar has been slowly rising, just like what happened in July. Take a look that when 1680 happened, it rallied all the way towards 1800. If we will see a repeat of dollar weakness, that means that your gold will go from 1680 all the way back to 1800 for a double bottom happening towards your gold, and perhaps a further weakening of the dollar, which could prompt your gold all the way to 1840. Same thing. So for silver, this rallied before from about 18 all the way to 21, made a new low this time to about 1790, but has rallied back to 19. We think that this 19 area will also come back to 21, which prompts us to have a view that commodities like silver and gold will benefit obviously on the dollar weakness. And for the time being, we think that selling the dollar and actually favoring the risk asset is a better play, at least in the short term. We're talking about, say, a month or 2 months. Australian dollar has also done the following, just like June, July, when the market actually short-term bottomed. We'll see that about Aussie dollar has rallied from 67 all the way to 71 cents. We're seeing a repeat of that, as I said, the largest daily close in over a month. So the 67 area has become a support. It's now trading at 68.69. We view that any dips of Aussie dollar will be supported. Any dips of gold and silver will be supported. Dollars will be sold in the short term as a take profit stance, and perhaps Aussie will be going up to as high as 70 to 71 cents yet again, which will provide the rally for the markets, which we think the S&P has leeway to rally at least 5%. Euro dollar has also gone up. You'll notice that June, July, from 99 cents, this rallied back to 104. Perhaps nowadays it's going to happen yet again from 99 cents back to 104. A 4% appreciation of euro is expected because of their interest rate hikes. So this year dollar yen, you're starting to see just like before from about 140s falling down to 132, rally to a new all-time high for dollar yen 144. We think this goes back to 136. If you plan to go to Japan, perhaps now is the best time to buy your Japanese yen and exchange your US dollar to Japanese yen while the currency rate is really in your favor. I.e., dollar is very strong, Japan is very weak. We don't think this will happen forever. So you might actually see 144 go back to 132. This might be a very good time to sell dollar and buy Japanese yen. Let's take a look at the energy select funds. So we're seeing that the energy select funds like XLE has been the strong outperformer this 2022, and this was also the case in 2021. So we would argue that this might be trading in a sideways fashion. So in the short term, people might assume that energy has peaked in the $120 and is going to go sideways. So $80 to $70 is where it's probably going to be sideways first before the next run up for energy stocks, perhaps 2023 or so. So micro sector US big oil index. This is a three times leverage fund. That's why it's very huge drops when it happens. From 800, it fall to about 200, rallied back to 550. Right now, I think that this will go back to about 400 or 350, and it's actually consolidating sideways, which actually is equivalent to oil actually sleeping here at about 85, $80 or $90. So that means that temporary weakness of oil will still be bought, but it will also be capped with as much as $95 as its peak. This is PDC Energy. So what you're seeing in the strong stocks in the energy space is that they are consolidating. For PDC, peaked at about $84, fell to about 53. So far, I think the next 3 to 6 months is going to consolidate with 53 as the bottom and 80s or 70s as the temporary peak for PDCE. So maybe if you're looking to buy energy, you don't need to buy agad because the market is actually looking to profit take some energy stocks. Perhaps this may even fall all the way to 53 or 56. So nonetheless, I think for 2023 and so on, because the market will still be loving energy stocks as a sector, you can see that the long-term trend for XLE and a lot of these energy names continue to be up. So you're just waiting for a consolidation. And I would assume that the recent drops here of June, July might be a retest, either a retest or this one is already heavily supported at about 60. So let's watch the market to tell us what's going to happen to energy. But I'm seeing profit taking on energy names. Matador is also profit taking. You can see that while it is in a long-term uptrend, the short term looks to be a sideways. So for energy stocks, i.e. shale producers, my view is that it's going to stay sideways first. Momentum is not yet within them. Perhaps people will accumulate it again, yet 10% lower. Rig is also just sleeping here at about 360. It could fall back to $3 for another entry point here. So if you're really bullish on a lot of these oil plays, don't get too aggressive yet. You might get actually a good entry somewhere lower around September or next 2 weeks as the market could rally while the dollar is weakening. Earthstone Energy is trading at $13.93. It fell to about $12 before, had the heavy support at $11.86. Should you wish to buy Earthstone, I would say that these supports at about $11, $12 looks to be a good entry, which is still 10 to 20% lower. So no hurry or not yet oversold. So you're still gonna have to wait for these energy stocks to get oversold if you want to buy them. Vermilion Energy, the same thing. It might actually correct full correction towards $19 to $20. If you want to enter VET, try to enter 19 to 20. But of course, all-time highs is yet to happen for VET as well as this OVV, SM. All of these energy stocks, in my view, will still hit all-time highs next year. But in the short term for 2022, after rallying quite substantially, you'll notice that these has gone more than 50 to 100% on some names. A lot of the profit taking is already happening for energy stocks. Calen Petroleum, the same thing. So for 2022, just sleeping already here about 34 to 40, already trading in a sideways formation. Marathon Oil also trading in a sideways formation, although very strong still. Just like VET, I would argue that this has leeway to drop 10 to 20% further. Now let's take a look at growth stocks, and crypto has been usually typically considered a growth stock, and Bitcoin has dropped after 75%, has been sideways here at 18.5. There still looms a lot of moving average resistances, a lot of resistance here at 22,000 and furthermore at 30,000. We don't think that crypto is actually going to reverse very strongly. But the fact that it has been supported here at about 18,000 tells us that it's going to go sideways. And resistance is at 22 and 30. A break above 22 will be better for crypto. But so far, still sleeping. MicroStrategy is still below moving averages like Bitcoin. It's below 250 and below 360. We would view that because Bitcoin and MicroStrategy so far moves almost like a 1:1 correlation. As Bitcoin perhaps rallies to 22,000 or 24,000, MicroStrategy could rally between 250 to 350, which is standing at $300. And maybe if you're looking to sell Bitcoin or sell MicroStrategy, wait somewhere at about 24,000 and wait somewhere 300 for MicroStrategy. Coinbase has been rallying, although, as I said, also below moving averages. So even as it is rallying, we think this is a mean to reversion, but a lot of selling pressure here at $90 and $100. So for crypto, it's still not go patrol. It's still not a bullish move, but it's a bear market rally still for crypto. Marathon Digital also bear market rally, but this is quite significant rally. You can see that from 50-day moving average of 11 has rallied to 13. There is a lot of selling pressure, however, here at about 17 to 18. So even as Mara rallies, be careful. There might be an opportunity to sell at about 13 to 16. And this is actually more of a bear market rally, in my view, for Bitcoin, Mara, still not a safe play. This one, however, is quite interesting. UU or uranium, one of the largest energy uranium producers, has already shown to us outperformance. So from about $5 to $8, that is a 60% rally. We would view any dips back to about 6 areas to be a great support area. And this might actually be a move all the way towards 10 or 11. So take a look at these. Very strong momentum into your uranium. UEC also, any dips at about 4 or 350 would be seen by us to be a very strong support. What you just want to wait out is a dip. And then if it doesn't dip, actually that is very strong for uranium. That means that this will go all the way towards 5 or 6 for UEC. Global X Uranium, very nice setup. You can see that strong formations here at $20 and recently higher low at 22. Conso and then 23. A further move to 27, 28 is possible. So if uraniums actually rally to 27, 28, you should expect that your UUUU and your UEC will actually go up. So usually these uranium stocks will move in tandem and high correlation. Same for this Sprott from about 70s, lots of selling pressure to about 60. So this $80 actually has leeway to rally all the way to 90 or even 100. So we are bullish on uranium. So far, Tesla has been the strong leader in the market when it comes to the NASDAQ and the QQQs. You can see that after a 50% drop, despite a 33x move over 2019 to 2022, we're seeing that it actually had a nice consolidation. Chances are Tesla's being bought and not sold much. A lot of buyers at 240 and 260, a strong move up to about 290s. It could even rally towards 320 and maybe sideways, but sideways with an upper trend bias. Microsoft is still in the sideways formation, below moving average, below the resistance at 290, and still below the resistance in 50 days. So slightly weaker. Microsoft is weaker, but highly oversold, which prompts us to say that this 250 area could rally to 270 areas, which will make your S&P 500 also go up. So sideways for Microsoft. Alphabet is also sideways. Take note, it is below two moving averages. Your green line here is your 200-day, which is still standing at 126, and you have a lot of selling pressure again at 115. I am confident, though, that Alphabet and Microsoft, although they are still below moving averages, they are already trading in a sideways formation. And as long as these levels of 106, which has been multiple retested to be supported, will continue to be supported, chances are this will just sleep within 106 to 115 to 123. Apple is a stronger name, just like Tesla. So far, still below moving average at 160 and still below 155. Looks like it's gonna trade sideways for Apple with a lot of bulls still at 150 area for Apple. Arc Innovation, so it's below a lot of moving averages, below 60 and below 45. Two things could happen for ARC. It gets retested here at 45, 46, and either people would sell the rallies, just like Bitcoin, people could sell the rallies at 22, 24,000. And most likely, ARK is going to move the same pace with Bitcoin. So far, I think people would sell rallies on growth stocks. However, even if they sell rallies and growth stocks, that is still 10% higher, which is still sizable from from a rally standpoint. So that's it's a very fast lesson for the day. We're just really discussing that the markets are showing potential bullish formations. And for those who are long the markets, I'd suggest that you try to pick on the leaders, and solars are leaders. Now, for energy names, looks to be sideways. Your index names on growth are still below moving averages. So you should take a chance to sell on rallies in the short term, because usually laggards will always give you an attempt to buy on lower on retests or even retests of bottoms. So next 2 months will actually show to us how high this rally goes. But my idea is that you will get a 10% rally. So bottoming out formations are already clear in the making. And you already have leadership on which energy companies to get into. So solars, renewables, and uraniums are the best picks in terms of technical leadership. Okay, that's it. And see you again next week for another Free Friday class. Bye bye.